Welcome back here with the Diwali special edition of Money, Money, Money. We've been discussing all kinds of wealth generating ideas, different asset classes. Now it's time to come down to some final thoughts. And for that, Gaurav, I'll start with you because earlier in the conversation, you gave a bit of a reference to these terms. WPI with a twist, IIP with a twist. Some basic rules of investing that one should always keep in mind, right?
What I was talking about is basics of financial planning.
Financial planning rather, yeah.
So I'm saying start with your goals, but people are more concerned about country's GDP. You should be, what is your GDP? Goals and dreams plan. Or
the goals and dreams plan, your own GDP, focus on that.
Exactly. Okay. What are your IIP numbers? Investment income plan. Where is money coming from? Where have you invested? Is it going to take care of your goals when you need them? Because no point having investments which are illiquid and then that's creating problems.
So focus on your monthly IIP number, focus on your GDP. What's next?
Stop EMI and start EMI. So
stop EMI and start?
So stop paying EMI, start investing in EMI. So basically what I was talking about is get out of loan as soon as possible, because when you're paying loan, equated monthly installments, there's certain interest component which is your expense, and get into equity monthly investment, which is like, going to build asset for long term. I also spoke about WPI, so where I was saying that wealth passing instruments, where I'm saying is nomination in place, do you have your will in place, because people don't have that now. No point building up assets, a brilliant portfolio, but when it comes to inheritance, your family is stuck. I mean, that doesn't make sense. Similarly, conduct your AGM with your family.
AGM?
Yes, because again I've seen this will be time and again that the person who's handling, it could be the male member, it could be the patriarch, or now in nuclear families even wife, but then the other members of family are not aware of it. So even if you have a health insurance which is brilliant, but the person who's in know of it is
should know
ill,
about it, yeah.
But other persons don't know, they don't know. So look at that, look at your quarterly results. So go for quarterly, in fact I also say that couple go on quarterly dates, financial dates. And kind of
financial dates, oh my god, I don't know how that idea is going to go down. But interesting thought.
Yeah, because I'm saying
take your balance sheet, your family balance sheet along with you over a candlelight dinner.
Yeah, I mean in every quarter spend 2 hours. I'm saying yearly spend 8 hours where the entire family, or at least spouse, husband and wife know where are the finances, where is income, where are the when new goals are coming in, do we have liquidity easily available? I mean, there are a whole lot of it. Your CEO, contingency and emergency option, if contingency was to come in, where is that money? So people keep looking and discussing the country's GDP, the IIP, the WPI, what's happening. Are you aware of yours?
Of your own acronyms, it's very important to keep that in mind. Nilesh, final thoughts from you as well. Have you seen the retail investor get a little more mature over the years? We haven't heard of too much of redemption pressure, for instance, the entire last 1 year, even when the market was falling. And any other tips that you'd like to leave people with?
Times have really changed. There was a time when in market correction, I used to tell investors, "Ghabrana mat, theek ho jayega." Now time of correction, people are telling me, "Nilesh bhai, darna mat, theek ho jayega." So retail investors have really matured. One, they are investing for longer term, and we are seeing average holding period of our investors increasing day by day. Second, they are investing via SIPs. As a mutual fund industry, we have more than 1.1 crore SIPs, bringing in about 3,500 crore every month. So kudos to the maturity of retail investors that today we are becoming more bullish about market. We are getting our conviction stronger about the market. My tips to the investors is very simple. Making money is very, very simple, but it's not easy. The simple rules are long-term investment, a decent asset allocation, and regular investment. These are very simple things to follow, but it's not easy to follow.
And we'll end by letting the wealth planning experts, so I'm going to give you $100. Let's say if you have $100, divide all of that in terms of allocation across any asset class that you wish to put it in.
Well, I think if you have a longer term time horizon, beyond 3 years, I would say that I would put maximum amount in equities and keep some money aside for liquidity or any emergency needs that you have. So I would go with a 70% allocation to equities and maybe $20-30 split into fixed income and some amount in liquid assets.
Okay.
But I think equities is what is going to create the maximum wealth for you over the next 3 to 5 years.
Okay, Pratik, medium risk profile investor, $100, how do you split it up?
See, going with the theme which my colleagues have said here, the eighth power, they talk about the eighth power is the power of compounding, right? So if all your growth capital should be in equity and equity-linked instruments. And then whichever way you want to generate some sort of income is where debt or the real estate investment trusts or any other of these yield assets will come into play. So it would roughly, for a medium risk investor, it would be a 50% growth capital and 50% which would be in debt and yield instruments.
Well, on that note, I'll take this opportunity to thank all of you gentlemen. Thank you so much for your time and your patience and for sharing those amazing insights with all our viewers. Season's greetings, happy Diwali, and we wish you a very prosperous new year. And that's exactly what we wish our viewers as well. Thank you for keeping it with us. We'll keep getting you more ideas on money, money, money.